What I am about to show you is the most important pattern in precious metals history. Right now, silver is trading around $90 per ounce. It hit an all-time high of $121 on January 29th, before crashing 47% in a matter of days. Most people think the rally is over. Most analysts are calling for caution. But here is what they are not telling you. A rare pattern not seen since 1979 has reappeared. Clusters of consecutive weekly all-time highs. Historically, this structure preceded silver's most explosive moves, including its near 700% surge into 1980. In 1979, the price for silver jumped from $6.08 per troy ounce on January 1, 1979, to a record high of $49.45 per troy ounce on January 18, 1980, an increase of over 700% in less than 12 months. If you own silver, you need to see what I am about to show you. If you are thinking about buying silver, you need to understand why history is repeating itself right now. Almost move for move, pattern for pattern. Something is happening. And by the end of this video, you will understand exactly what it is. Welcome to AG Profit Hub. This is where we cut through the noise and expose what is really happening in precious metals markets, while everyone else feeds you the official narrative. Subscribe right now and hit that notification bell, because this is the kind of historical analysis you will not find anywhere else. If you find value in this video, smash that like button. It helps the algorithm show this to more people who need to see the truth. And trust me, understanding this pattern could be the difference between life-changing gains and watching from the sidelines. Let me set the stage for what happened in 1980, because most people only know the headline. They do not understand the conditions that created the greatest silver bull market in history. The silver price surge of 1979-80 did not come out of nowhere. Inflation in the United States was already over 13%, and the dollar was falling. Trust in the financial system was shaky at best. Starting from a stable level under 2% in the early 1960s, year-over-year inflation in the United States rose to 6% in 1970, reaching peaks of 12% in late 1974 and 15% in early 1980. 15% inflation. Let that sink in. And what was causing this inflation? The origins of the Great Inflation were policies that allowed for an excessive growth in the supply of money, Federal Reserve policies. In October 1973, the Organization of Arab Petroleum Exporting Countries' embargo of oil exports to the United States would have repercussions throughout the remainder of the decade. Oil crisis, money printing, dollar devaluation, geopolitical instability. These were the conditions that sent silver from $6 to $49.45. Now here is where it gets truly alarming. From 1978 into 1980, the world witnessed a US dollar quadrupling of crude oil prices, a quintupling of platinum prices, a six-folding of palladium prices, and a gold price spike from $200 per ounce in early 1978 to a then-record high of $850 per ounce by January 21, 1980. All commodities surged together. Silver was not an isolated event. It was part of a massive flight from paper currency into hard assets. Now let me show you 2026, because when you put them side by side, the similarities are stunning. Several key indicators suggest 2025-2026 mirrors the structural conditions that triggered the 1979 acceleration. Similar currency debasement pressures. Federal Reserve policy stance with rate-cutting cycles, reducing precious metals holding costs. Currency confidence metrics showing declining international USD reserve accumulation. Central bank behavior with accelerating gold purchases and reserve diversification. Industrial demand surge with technology sector silver consumption at historic highs. The U.S. national debt is nearing $39 trillion and could reach $40 trillion by the end of this year. The debt has hit 100% of GDP. Interest costs on the debt surged to roughly $1 trillion last year. In 1980, the government was printing money to deal with Vietnam War debts and oil shocks. In 2026, the government is printing money to deal with pandemic debts, military spending, and entitlement programs. The pattern is identical. Only the scale is larger. And here is the geopolitical parallel. In 1979, events in the nation of Iran caused the beginning of the second oil shock, which led again to gasoline shortages and panicked long consumer lines at gas stations in the USA. Sound familiar? Iran is back in the headlines. Washington has given Iran a strict 10 to 15-day deadline on nuclear enrichment. Aircraft carriers are in position. The Middle East is on the brink. 1980 had an Iran crisis. 2026 has an Iran crisis. 1980 had runaway inflation. 2026 has persistent inflation. 1980 had dollar devaluation. 2026 has the dollar at a 4-year low. 1980 had oil shocks. 2026 has tariff wars and supply chain disruptions. The macro backdrop is almost identical. Now let me show you the price patterns because this is where it gets truly remarkable. Silver began 1979 at $6 an ounce and climbed to nearly $50 in January 1980, an increase of over 700% in less than 2 years. During the height of the mania, silver rose at a rate faster than gold, stocks, and bonds, attracting speculators from outside the typical commodity market. Now look at 2025-2026. The most dramatic move came this year, when silver surged from $29 at the beginning of 2025 to a new all-time high above $121 in February 2026. That is a 317% gain in just over a year. And we had a brutal correction, just like 1980. Silver's sharp sell-off in early 2026, falling more than 40% from its late January peak near $121 to around $70, has revived comparisons with the metal's historic collapses in 1980 of negative 65% and 2011 of negative 35%. In 1980, silver crashed from $49.45 to $10.80, a 78% decline from peak to trough. In 2026, silver crashed from $121 to $64, a 47% decline so far. But here's the critical insight about 1980 that most people miss. Then, in January 1980, the climb accelerated. Silver surged from $40 to $49.45 in a matter of days, an unprecedented 24% gain in less than 2 weeks. To put that into perspective, investors saw nearly a decade's worth of typical silver price appreciation compressed into a few trading sessions. The final spike happened after a significant consolidation. The biggest gains came at the very end. That is the nature of silver bull markets. They tend to be shorter, sharper, and more dramatic than gold's, rewarding those who position early. And here is what the chart analysts are seeing. Historical pattern analysis using the 1979 bull market suggests 420 taus per ounce potential if 2026 replicates the 409% return from that precedent cycle. This calculation applies documented percentage gains to current price levels rather than speculative projections. $490 silver, if history repeats. Now let me tell you where 1980 and 2026 differ, because understanding the differences is just as important as understanding the similarities. Unlike 1980, today's rally is not built on a single concentrated buyer, but prices have still moved faster than underlying supply growth, raising questions about sustainability. In 1980, the Hunt brothers accumulated about 200 million ounces of silver, representing about 1/3 of the entire world supply of tradable silver. That episode was driven by extreme leverage and concentrated positioning, ending with regulatory intervention. The 2026 sell-off, by contrast, was broad-based, spread across hedge funds, ETFs, retail investors, and systematic strategies, with no single dominant player or policy clampdown. And here is the most important difference. Analysts point out that the 1980 rally was driven by speculation, whereas the 2026 rally is anchored in a massive physical deficit, making a repeat of the Silver Thursday collapse less likely. In 1980, there was no industrial demand for solar panels. There was no AI. There was no electric vehicle revolution. Silver was primarily a monetary and jewelry metal. In 2026, industrial demand accounts for 59% of usage for silver. In 2014, only 11% of silver industrial demand was consumed in the solar sector, compared to 29% in 2024. Solar alone is expected to nearly double silver demand between 2020 and 2030. By 2050, cumulative solar demand could equal 85 to 98% of today's known silver reserves. The 2026 rally has a demand floor that 1980 never had. Even if investment demand collapses, industrial demand keeps growing. This latest surge is not merely a speculative rally, but the culmination of a decade-long structural deficit meeting an insatiable, price-insensitive demand from the artificial intelligence and green energy sectors. And here is the supply side. The silver market has been in deficit for 5 consecutive years. From 2021 through 2025, global silver inventories declined year after year, creating cumulative shortages approaching 820 million ounces. 820 million ounces. Gone, consumed, never coming back. In 1980, the shortage was manufactured by the Hunt brothers hoarding. In 2026, the shortage is structural. It is real, and it cannot be fixed by anyone selling their position. Now let me tell you what happened after 1980 and what it means for today. On March 27, 1980, a day that would be remembered as Silver Thursday, silver prices collapsed by more than 50% in a single day, plummeting from $21.62 to $10.80 per ounce. The crash happened because the COMEX adopted Silver Rule 7, which placed heavy restrictions on the purchase of commodities on margin. The rules changed mid-game. But here is what most people do not know about the aftermath. The Hunt brothers denounced a conspiracy and an arbitrary change in the rules of the game, but the U.S. courts ruled otherwise. Their strategy constituted market manipulation. But here is the critical fact about 1980. Even Jeff Christian of CPM Group, one of the most widely cited experts in precious metals, told Mike Maloney that the Hunts might have contributed 50 to 75 cents to the silver price, not $50. In reality, rampant inflation and real-world concerns about U.S. dollar viability were firmly afoot in the 1970s and early 1980s. The Hunt brothers were scapegoated for a move that was driven by much larger macro forces. Those same macro forces exist today: inflation, dollar weakness, geopolitical chaos, debt crisis. And here is what institutional analysts are projecting. Bank of America's Michael Widmer projects silver could reach anywhere between $135 and $309 per ounce before the end of 2026. The wide range is intentional. Both targets are anchored in historical ratio math. The math behind both targets starts with the gold-to-silver ratio. With gold near $5,000, applying the 2011 ratio low of 32.1 puts silver at $135. Apply the 1980 extreme of 14.1, the level reached during the Hunt brothers' silver squeeze, and the number climbs to $300. If we return to 1980 ratio levels, with gold at current prices, silver goes to $309. Let me leave you with this. In 1980, silver collapsed to near 15 as silver dramatically outpaced gold. In recent months, the ratio has tightened sharply again, reflecting silver's aggressive rise relative to gold. Historically, such compression has often preceded periods of heightened volatility, if not outright corrections. 1980 had 15% inflation. 2026 has persistent inflation and $39 trillion in debt. 1980 had the Iran hostage crisis. 2026 has Iran nuclear deadline. 1980 had dollar devaluation. 2026 has the dollar at a 4-year low. 1980 had the Hunt brothers creating artificial shortage. 2026 has a structural deficit from real industrial demand. 1980 ended with Silver Thursday and a 78% crash. 2026 has already crashed 47% and is recovering. The patterns are almost identical, but the fundamentals in 2026 are stronger. Precious metals bull markets demonstrate acceleration toward cycle completion rather than early exhaustion. The 1979-1980 pattern showed the largest gains occurred after silver had already appreciated substantially, contradicting traditional investment timing strategies. The biggest gains in 1980 came at the very end, after the consolidation, after the correction, just like where we are now. Drop a comment telling me whether you think 2026 follows the 1980 playbook or charts its own path. I read every single comment. Subscribe if you have not already. Hit that notification bell because this historical comparison is far from complete. 1980 went from 6 to 49.45, a 700% gain, a 700%. 2026 could go from $29 to $200 or higher if history rhymes. The pattern is repeating. And now you understand exactly what it means. This is AG Profit Hub because the real story is never on the surface. I will see you in the next one.